So, Michelle, we've been talking about these bottlenecks in the commodity space as well. How are these material shortages really changing this global debate now on whether inflation is, quote unquote, transitory or something more permanent this year?
Yeah, well, the debate rages on, Yvonne. I mean, this growing list of commodities seeing price surges is certainly rattling markets, and it's starting to shake what was a fairly solid consensus among economists and policymakers that inflation is largely temporary and not so harmful to the recovery. So as these supply shortages really start to percolate, we're seeing more and more companies announce that they're passing on higher cost to consumers. And just in recent days, we have Clorox, Nestle, Carter's Inc., Colgate, Palmolive, and others saying that their products will be more expensive in the months ahead. So we've been tracking the story, of course, on semiconductors and oil for some time, but the especially steep surges for things like copper and lumber and palladium, as your guest mentioned earlier, those are all having an impact. And every day it seems we're getting more evidence where overnight you saw an 8-year high for corn prices. So we were already expecting that this returning global consumer in the recovery, armed with all the stimulus in some economies like the U.S., could deal with those higher prices for some everyday items. But the question now is how quickly can the market rebalance? And are we going to see these higher prices through the year end, maybe even longer? Some analysts are increasingly worried that this isn't just a matter of getting folks back to work to produce these orders and to get mines back online, and that there's actually just not enough of some of these materials to meet demand. So perhaps a more structural uptick in inflation is inevitable.
There are wide-ranging implications, Michelle. What does it all mean for investors, consumers, businesses, even policymakers?
Well, brace yourself. This debate is far from over, I think, is the bottom line. But markets have been skeptical all year that this inflation would just pass away, that it would just be transitory, as the Fed always likes to say. And investors are arguing that this is different from other periods because of the actual physical shortage of these goods. So for investors, it might be difficult to keep calm in this environment, though it's a different narrative for each commodity. So they're likely to be busy chasing all sorts of factors that impact supply and production of these goods, including COVID recovery issues in the countries that produce them. Consumers, meanwhile, will have to prepare for those higher prices that most agree will at least last through the summer. That was always kind of the prediction, perhaps through the second quarter, but maybe longer. And businesses are in a tough spot. Many in the quarter one earnings calls tried to reassure investors that they're keeping good margins because their customers can handle a bit of an uptick in cost for their products. But that also rests on the assumption that these consumers will stay healthy and shopping in all of these economies. So lastly, policymakers might have to bend a bit. Most of them right now, especially at the Federal Reserve, continue to double down on prioritizing employment first and saying inflation's not a threat and that we have the tools to address it. But you did see the big debate out of Yellen's remarks overnight, and this seems to continue where you have investors and businesses on one side and economists and policymakers mostly on the other, all trying to work out where inflation goes from here and whether it's harmful to the recovery.